You have seen your portfolio going down into deep red as soon as you have opened the app of investment today. But let me tell you, you're not just alone sitting over there staring at your portfolio and wondering, should I liquidate this portfolio amongst all these global issues that are going on? And at the same time, there are people who have been regularly putting money into SIPs, and now they're thinking, should I just stop this SIP or should I continue with it? What should I do? So they're confused. So I'm just going to give you a few ideas about how things work, and then you can decide it for yourself on whether or not this kind of situation can really create a long-term problematic impact. We are talking about this Iran, USA, Israel conflict. A lot of chaos is happening. There is unpredictability in the stock market, and this has led to huge sell-offs by the foreign institutional investors, due to which what we see today is what we are seeing. Right, the markets are crashing. Though no one till date is actually very good at accurately predicting the share markets in 100% extent, but what we can do is at the most have a more logical perspective of how things are shaping, what is the past historical data, and accordingly decide our strategies in the future. So, here I'm telling you three things which you have to keep in mind before you are actually just going and rushing towards clearing up your portfolio or liquidating your SIPs. Because first thing you need to remember is this money really required by liquidating the portfolio? In which basis do I require this money? So am I in a cash flow crisis? First thing. If I'm not in a cash flow crisis, then just wait, right? The situation is not going to be a permanent one. In fact, if you look at the SIP portfolios and investments, or even for that matter, lump sum investments, people can take actual advantage of falling markets. Because when people overall are panicking and leaving the markets, you're the one who can actually buy those things, buy the lump sum amounts in mutual funds or stocks, SIPs, whatever the case may be, and this can actually help you get the price averaging. So overall cost of your portfolio will come down to a lower level. So you have bought at an upward level, you have bought at a lower level now, and averaging will bring it somewhere in between, which can give you an advantage in the future. Now coming to the second thing that you need to keep in mind is long-term investments. Remember, there are long-term recoveries which come after markets fall. So we have seen these kind of situations in even after the COVID era. So if you are having that patience, having that stability of an income source and flow, then instead of panicking and withdrawing everything right now, you can have a strategic understanding of where your portfolio is actually invested and then take a call. So just concluding that there will be no recovery at all and the markets will be like this only in the future also may not be a good idea to keep in mind. Thirdly, an important thing is that those people, those investors who have a steady mindset, in fact take the advantage of this kind of situation. So if given a choice, we generally prefer to buy during such periods, because this kind of time frame will give us the advantage of lowest price. Top level companies, if I'm investing in, this is something which can give me a long-term profitability. In fact, exiting during a fall and again going back and investing during the upward swing is total nonsense, because it is something which will create a negative impact on your profitability. Just keep a calm mindset, think, and then act. Don't go in a rush towards just trying to liquidate your portfolio, or just panicking and dissolving all the assets and just stopping your SIP. So think and then act. This is what I would suggest.